Welcome back to the channel. If you're tracking the latest moves in crypto and AI infrastructure, today's video is a must-watch. We're diving deep into Monad, or MON, the layer blockchain that has been making waves since its mainnet launch on November 24, 2025. From a massive token sale to a meteoric price surge, MON has captured the attention of both retail investors and major institutions. But here's the question. Now that the initial excitement has passed, what's next for Monad? Is it consolidating gains, or is the market bracing for a new catalyst? Today, we'll break down market momentum, institutional support, technical factors, and how investors can strategically position themselves in this evolving landscape. This is not financial advice. Please do your own research before making any decision. The launch of Monad's mainnet wasn't just another blockchain rollout. On November 24, 2025, MON went live, triggering a ripple effect across the AI infrastructure and crypto markets. To give you a sense of scale, the public token sale raised a staggering $269 million, while an additional $105 million was distributed through airdrops. The market responded almost immediately. Within just 48 hours, MON saw a price rally of about 40%, marking it as one of the fastest-moving tokens in recent memory. Ambi Crypto reports that the token jumped over 51% in the early days of trading, hitting highs of $0.48. What drove this surge? Primarily, it was a combination of whale activity and retail accumulation. Large investors were aggressively taking long positions, causing open interest to spike nearly 60%, while derivatives trading volume jumped an incredible 139%. On the retail side, we saw strong accumulation signals such as a sharp negative spot net flow on November 26th, indicating that everyday investors were snapping up MON at these early price points. From a technical perspective, Monad didn't just make waves, it broke through key resistance levels right out of the gate. The Relative Strength Index, or RSI, hit 79 in the first days, signaling overbought conditions but also showing strong upward momentum. The network itself isn't just fast, it's designed for serious throughput. Monad can handle up to 10,000 transactions per second, boasts sub-second finality, and is fully compatible with the Ethereum Virtual Machine, EVM. This attracted developers and liquidity providers almost instantly. In the hours following the launch, more than 100 apps were already deployed, and over $115 million in liquidity flowed into the network. Institutional investors weren't left out of the party. With a highly regulated token sale on Coinbase, over 85,000 participants joined in, contributing to a total of $269 million raised. Major crypto funds and venture investors poured in more than $225 million, signaling strong confidence in Monad's vision of high-performance blockchain technology that's also Ethereum compatible. This institutional support translated directly into liquidity. Exchanges like Solana and Hyperliquid listed MON on day one, generating over $60 million in trading volume in just 24 hours. Beyond the price action, the tokenomics also reflect a deliberate strategy to maintain credibility. Out of the total 100 billion token supply, a significant portion is either locked, reserved for ecosystem development, airdrops, or long-term vesting schedules. This reduces the risk of short-term sell-offs. As of November 25th, MON was trading at 0.048, with a market cap of approximately $1.2 billion and a circulating supply of 2.5 billion tokens. Analysts are optimistic, projecting potential targets of 0.10 by 2026 and 2.89 by 2030, assuming continued adoption and network growth. While the initial launch frenzy made headlines, the weeks following have been relatively quiet. No major announcements or partnerships have emerged yet, which raises an interesting question. Is the market consolidating, or is it quietly positioning for a bigger event? Technical indicators suggest a consolidation phase. The RSI has cooled to around 45, reflecting neutral momentum. Bollinger Bands are tightening, which usually precedes periods of higher volatility. The 50-day moving average sits near 0.05 and could act as resistance, while a potential golden cross is forming as the 50-day MA moves toward the 200-day MA. However, it's important to note that the top 10 wallet addresses control roughly 25% of MON's supply. Any large sell-offs from whales could amplify price swings considerably. So, what does all this mean for investors looking to get involved with MON? First, there's the upside. Monad's deflationary token model burns a portion of transaction fees, potentially reducing circulating supply over time and increasing scarcity as adoption grows. However, it's not without risk. The layer blockchain space is competitive, with Ethereum, Solana, and other established networks dominating much of the market. MON must continuously innovate to carve out a meaningful niche. Investors might consider a strategy that balances short-term volatility with long-term potential. For instance, dollar cost averaging into MON as it consolidates around key support levels 0.042s and 0.038 could reduce exposure to sudden swings. Conversely, monitoring resistance levels around $0.055 and 0.065 could help identify potential breakout opportunities. Given the speculative nature of the token, hedging or diversifying into the broader AI infrastructure sector might also mitigate risk. Beyond price and trading activity, Monad's technical and ecosystem fundamentals are impressive. Its high throughput, EVM compatibility, and developer-friendly architecture give it a tangible edge in attracting projects and liquidity. Early adoption metrics such as 100-plus dApps and $115 million in liquidity within hours signal strong real-world usage, not just hype-driven speculation. Institutional credibility further strengthens its position. With over $225 million coming from venture funds and large crypto institutions, MON isn't just another token. It has backing that could withstand short-term market volatility. Of course, no investment is without risk. The concentration of supply among top addresses poses a potential threat, as does the competitive landscape of layer blockchains. Short-term volatility could be significant, and without new catalysts, price action may remain muted in the coming weeks. Investors should also keep an eye on regulatory developments, especially with large institutional involvement. Any changes in compliance requirements or market access could impact liquidity and trading dynamics. To sum it all up, Monad's post-mainnet journey has been a mix of explosive growth, institutional credibility, and early adoption, but it now enters a phase of consolidation. The technical indicators suggest neutral momentum, while the fundamentals remain strong. For investors, MON presents both opportunity and caution. Its deflationary model and ecosystem growth offer long-term potential, but short-term volatility is inevitable, particularly given whale concentration and competitive pressures. A strategic approach using technical signals and dollar cost averaging may help navigate this dynamic market. As always, stay informed, monitor key indicators, and remember, in the world of crypto, timing and strategy are just as important as technology. Monad has proven it can move fast, but the next chapter will depend on adoption, partnerships, and the broader AI infrastructure landscape. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.